Good morning, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for our soybean futures market. It's August 29th, 2023. Remember, trading futures involves risk. It is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. We're going to start today. Well, I guess today's little strategy of the day is just a quick 5 minutes here on the soybean futures. You can check out my most recent update there from last week. Wanted to bring everybody up to date here this week, having gapped up, pulled back there in some gap and fill price action here to start this week, moving above that downward sloping trend line against the highs here to end the month of August on a strong note. Upward sloping trend lines against the lows I think are still intact. You can make a good argument here now that the beans are back above $14. We're going to be probably putting some kind of threat on old contract highs there going back to April around 14.45, 48, whatever they were. Either way, only about 50 cents higher. Above the 18-day moving average, the 200-day moving average, and the 155-day all holding a support there, with the 55-day hundreds down there, down at 12.96. But all three of those holding a support and a pullback there last week. And away we go, right? Not much more else to say about the daily chart. We really want to sink our teeth into the 4-hour and 15-minute time frame here. So let's take a look at those charts here. Got soybean 4-hour chart. Guess let's actually go back out to that daily just to kind of see the bigger picture again. There's that old resistance, possibly support, all around that $12.50 to $12 area. It's the level we capitulated below there in May. We rallied back above and have stayed above, and really above 13 then thereafter. From the COVID lows, effectively around that $8.50 figure to the highs thereafter in 2022, a push towards 14.48 and a quarter. Contract highs for November beans pulled back in a big three-wave pullback for the entire year of 2022 into the lows of 2023, down into a 50% pullback around 11.50. The lows here and the actual low from the month of June here, around 11.30 and a half, started a swing low to highs after that have given us a full 50% retracement. So that's from 11.30 and a half up to 14.35 after. 50% retracement held into 12.82. This is the lows that held to start the month of August off. We've seen a reaction off that area and have upside targets towards 15.06. That larger swing down to 11.55, that has a potential upside target of 15.92. So that's just, the technical 2 steps forward, 1 step back. 2 steps forward would take us towards $16. Breakout towards 18. I think those are achievable given the balance sheet that we have. And if there's also a strong demand picture for the rest of the year, which I think we should continue. Okay, so we know that we've got this kind of nested 1-2 pullback in the beans happening, and now we're breaking out, pushing towards resistance. A breakout of a 14 here is pretty indicative of that strength, that wave 3 of the strongest move higher. Upward sloping trend lines against the lows are places to watch for support. They come in around 13.60 to 13.50 at this time, and then down around $13. And again, those daily moving averages we looked at before, we'll continue to monitor those. All right, let's take this down now again to the 4-hour chart. The full pullback here from 12.82 lows to the 13.81 highs. We had another 50% pullback right into the 13.31 area. This is the supportive area from last week. It was the 50% retracement into the old resistance. We had a cluster multiple days worth of 1, 2, 3, 4, 5, 6, 7 days worth of highs in this 13.25 to 13.35 area. Well, the market broke out of it. We even gapped up. We pulled back to fill the gap. Hold resistance, trendline support, 50% support, and off to the races we go. We gapped up this week. We're now filling, or last night, on Monday, we were now kind of trading sideways, holding, above that breakout. And now the highs 50% retracement is kind of what's giving us support. We push up to 14.16 in the near term. I don't believe our next in the series, which would be drawn from 1332 lows to the highs after. The next in the series is the 1370. This market could pull back towards 1370 to 1360, test this old high, and still be in a channel and an uptrend higher. Okay, so there's a lot of room. You got to break down pretty far, basically below 13 bucks to convince me again that the beans are really going to go lower. I would be, say that 1370 to 1360 is a gift at this point. And boy, if we got down to 1350 to 1330, it's a real gift, but we'll see what happens. I think this might be all the support we get at this point in time. So if the market's going to continue higher and be more aggressive, we're going to look for a new trend line to kind of form against the lows and continue this kind of parabolic upswing for the beans. We might also just see some sideways price action because, hey, we have run up pretty good. We are hitting old highs. We are running into resistance where we would expect to find it from 14 to 1435. So, is the argument to be made that, like Schrodinger's cat, you don't know if it's dead or alive here. We don't know if we're in that trend or not until we're really breaking above some of these levels that could be resistance until they're not. But with all that being said, I think that the market's generally heading higher. I think there's a clear line in the sand with lows of today and above this gap fill that continues to put pressure on the bears here and gives the bulls some reason to think continuation higher might begin. Back below 1390, next support's at 1370, below there at 1330, and then really, if we break that far down, I would say that we're probably in a much bigger range here between 1435 and 1250 until we're not, and then back below, 1282 to 1250 range. That's where we're in trouble again. And open the door to, that 1150, effectively contract lows, right? Even though November beans was lower before, right? When it's been really liquid, that's as low as it could get there, down around 1130. But I don't think we'll be trading back there anytime soon. We got weather markets and reasons to think that beans could pop the top here. But I also think, right, a move up into resistance and towards some of these profit objectives is probably going to find some selling pressure. Anyone who didn't get any sales done, it's a great opportunity to do it again. Preaching to the choir here, but you guys know how to get in touch with me. 312-277-0110. My information in the bottom right-hand corner of the screen there. If you've enjoyed everything you've heard about here today, do check out our daily call in with our chief market strategist and vice and president over here, Ted Seifried. He gives his daily insights for those that are interested as well. Information to sign up for that call in the comment section, information section of this video. You should also join me every week to get my strategy of the week webinar. You can sign up for that in the comment and information section as well. With all that being said, everybody, thanks for joining me here today. I think beans are going to be continuing higher, certainly while we're above 14 bucks here. It's easy to say, but happy trading, and we'll see how the rest of this week takes you. Have a good day, everybody, and we'll be back with you as price action develops.